Real quick, I want to stick it with Cheniere Energy LNG for 2 seconds. Bob, look at this 257.65 level back here, January of 25. When it gets above that, uh, that's a breakout, and the volume is confirming that there's a lot of people that are seeing what you're seeing. So you see a print above 257.65, a close. You're going further north, in my opinion, after having a huge run, but it looks like a new move to the upside to me.
Yeah, and that's
But
the one
that's
name
what
I added. I've been nibbling at adding a little bit last week. So yeah,
I'd start chomping. 257.65. Start chomping. Okay. Anyway, what I have is Goldman Sachs. Charlie has been talking about this for a while. He just went in our internal chat, came back and said, yeah, 1Q is probably going to be good, but watch out for the other 3 quarters of 26. I bring it up because it closed below the 200-day yesterday and is joining all of the other, not all, but most of the other financials, Bank of America, JP Morgan, Wells, all these have gone down. Now the capital markets people that are going to benefit from this supposed IPO wave with SpaceX, et cetera, coming, that isn't enough to move the stocks up. So we got a clear violation of the 200-day. My discipline would be I would sell a third. You can see that the volume is expanding on the down days, is what you don't want to see. It's I think Charlie's got whenever Charlie's got the fundamentals and I've got the technicals pointing in the same way, I think that's a pretty safe way to go. I think this is going lower from here. Maybe not on the first quarter, but we'll see. But and I'll get two more, but this is Goldman Sachs, and I don't like it.
Well, all right. So Goldman Sachs violated your rule. They are
Yeah,
in the penalty box.
yeah, and I would just sell a third. And full disclosure, I don't own individual names, and I don't own this one, but that's what I see here. Disney, this is kind of mom and apple pie right now. I'm watching this 100 level. This is the gap up here back when they beat earnings back in March of last year, and they're spending too much time under the $100 level for me. I think very likely if it spends more time and closes below this $100 level, you test this 93 that you saw back here before the gap up, and 80 I think is the long term target. This is, and I pointed this out before, but this is uncanny to me. It's touched it in 2014. It's touched it in COVID. It's touched it 4 times since, and it better stop there the next time. Sorry, I can't move this. It's as big as I gotta get. But I mean, you've got 6 touches of the support at 80, so there's a lot of market memory there. I don't think it'll break down through that the first attempt, but if it ever does, then you're really going down significantly lower. So unless you love Disney and you got the fundamentals nailed down, uh, I'm bearish on Disney.
Well, I'd fight you to the death for that. Disney, American as apple pie, like you said. In fact, more American than apple pie. People can live their whole lives without apple pie, but they can't live their lives without taking their kids to Disney.
you know how expensive
Just
it
like
is to go to Disney now.
You know how
I
expensive
don't
it
know.
is to go to a Broadway show? People don't complain about that. Go to a crappy movie, it costs you $30. Disney,
I know.
you see the fireworks of your lifetime, and if you stay till the nighttime light parade, you see the greatest LED light show you've ever seen on a parade. Come on, I'm telling you now, it's a bargain. I know it doesn't feel that way, and I agree that it's not accessible to everybody. That part
Yeah.
is like not part of Walt Disney's dream. That said, yeah, it's expensive, Lots of things are expensive. Health insurance is expensive. You don't hear people complaining about that. Oh, actually, you kind of do.
yeah.
You do.
That's a sore point. That's a sore point. I'm just telling you what I'm seeing in the chart, and I know all those things, and Mickey Mouse, and the franchises, and brushing up on the Marvel catalog and all that. I just the stock does not want to go up; it wants to go down, and I think it's going to. So, um, unless there's a catalyst coming up that I don't know about, I would not touch this myself.
All righty.
I got one
What
more.
else?
Since I'm as popular as typhoid today in the Maris household, but uh, IBM is joining the party, and you can say, "Oh well, it's not that bad for IBM. It's caught up in this AI hysteria, and Anthropic is gonna compete with them." And again, I say you can say that it's not that much of a negative, but you can't say it's a positive that you have AI competitors coming. And so this closed below the tune a day on that first scare, about $20 higher than it is right now. The 200 day has turned lower. The 50 day has just crossed through the 200 day, which is why I bring it up. These bounces are Garfield dead cat bounces to me. Okay, that volume is not impressive on the up days. So the sellers are dwarfing the buyers here. This is a very logical place for it to stall out. This prior resistance that you see here. So um, you didn't in the days gone past. You didn't get fired for owning IBM or buying IBM. Frankly, both the computers and the stock. Now, I think those days are over. And what did I just do? I just told you that three Dow components look really bad. And if that's bullish for the market, then I've got to get a different chart book. But all three of those companies are in the Dow. The Dow has not joined to the party because I think they have enough energy so that they're rotating out of it. But the Dow ETF, come on now, I just had it. The Dow ETF has not broken down entirely, but it wants to. It wants to. So stay tuned. I can't get the Dow ETF here for some reason, but those are three Dow components that are really looking ugly, and I wouldn't touch them.
All right.